Hey traders, going into the end of this week, we're a solid month now, June 10th to now July 10th, into our long only bias. And if I were to basically look back on, I believe it's a total of 4 trading days where the sentiment was bearish and stayed bearish, and that long positions down at the bottom of the range, whether that be hourly price, movement range, or V-scores, did not work. Look, I'm going to be sticking with this bullish bias, so let this be sort of a reminder and sort of a reset on, gang, 1 month later, June 10th to July 10th, probably July 10th to August 10th, gang, we're going to stick with this long bias. Now, I want to point out a couple things to watch for and a couple things that I did today with an NQ. Now, first of all, not only do we have an NQ day trade, but yesterday I alerted out XLC, XLY, and TMUS options trades. And you might say, whoa, Rag, it's a futures room. You sent out 2 ETFs at a stock? When you think about the weighting of the most bullish market out there, most bullish index out there, it's the NASDAQ. XLC and XLY are heavily weighted stocks within the NASDAQ. All right. So you can see some of the notes from today that I put on the left side of the screen. This is stuff that I keep up in the chat room for the members. And yeah, we've got an entry in gold, and you guys can take a look at that. That's something that I'll be keeping an eye on and covering in the premium video as well. But the whole idea was to use that pit bull pullback, use the weakness that we could have seen today and yesterday to build these long positions. Now we start Thursday. We're open to scaling in again Friday, and then we're looking for bullish momentum into Monday and even into next Friday, the 17th. So XLY, XLC, pullback buys, and TMUS, which is a heavily weighted stock within the XLC. Those sectors are heavily weighted within the NAS, and they're going to move, generally speaking, with the NASDAQ. So while the NASDAQ did not come back to levels that I felt comfortable doing anything with, those ETFs and that stock did. Okay? And that's the way I take a futures first approach and trade everything. A lot of the traders we have in the room, they're not just index day traders. That's a small part of what I like to do, but it's a part. Now, let's talk about the day trades today, and I'm going to talk about some of the things we'll look at for the next 30 days of this long only bias that we're keeping. First of all, long only has you looking, well, not to be redundant, but long only. So as the markets are selling off, that's almost like the market's ringing a dinner bell for you and me. Come on down to the hourly price movement range. Come on down to the V-score extreme lows that we saw before the bell rang. Come on down to these support levels from where I will buy futures contracts long, but I will also buy options. Oftentimes, I will day trade the futures options. I will day trade the QQQ and any stock that I feel that I can take advantage of as the NAS sells off into specifically this range. Okay, so I'm not going to be taking the shorts, gang. I know we've talked about breaches and retreats and been open to trades in both directions, but we are in an asset bubble. Okay, so I build a trade here, and we pretty much, and this is one of those days where, look, I didn't know this was going to be one of those days we just sort of trend higher and we'd be knocking on the door of 10,800, right? We scale out as we can. And so for me, the non-negotiable level at which you have to scale out, not get flat, scale out, is the clearing range high. So as we take out that clearing range high, you really do need to pay yourself. And then you can see how much higher it's high. And it's been great since then too. It's been, we've just continued to climb higher. So today's just one of those days where if you had the long bias and you waited for the bottom of the range and you stuck with that long bias, there's less likelihood you're going to get twitchy when you're only looking long rather than long, short, long, short, long, short. It's tough to hang on to a big trend if you're doing that, right? I'm more of a set it and forget it kind of trader. I'm more of like, this is my pitch And I'm definitely looking to knock it out of the park every time I get a very specific pitch. But this was a very specific pitch. We'll get into the details, but suffice to say, my hourly price movement range calculation and my V-score calculation lining up, giving me an ideal zone from which I can enter and really understand that as long as I can stay inside the HPMR zone, I've got a recognizable amount of risk. I understand where I might start to lose traction to the upside, and then the downside could take over. Because I've got to be open to the fact we will have a handful of those sell-off days from time to time, okay? So ultimately what we have is just this market continuing to climb up higher, buy-only bias. So what are those pitfalls? Number one, we want to be aware of the Thursday going into the pit bull low. There could be some pronounced weakness on that day. We want to be aware of the end of the month. The last 3 days of the end of the month, we could see some pronounced weakness. Some of those pullback days going into the end of the month. All right, those are just tendencies that we could see. We also want to be aware that good data has not done us any favors. Good initial claims, good non-farm payrolls, they have been a little troubling to this market. We're coming up into earnings season, gang. This is where the tail wags the dog, and I'll talk a lot more about earnings season next week and how that impacts futures index traders. But in the meanwhile, keep an eye on those few dates per month. Keep that bullish bias, and I'll see you in the next update.